a lot of these banks are offering services that help consumers save, spend less. You're seeing neobanks arranging themselves around the customer segments they want to target. The question remains, can mainstream banks go digital first faster than digital first banks can go mainstream?
Hey gang, it's Tuesday, September 21st. Dan and listeners, welcome to the Behind the Numbers Daily, an eMarketer podcast made possible by VTEX. I'm Marcus, and today I'm joined by our Vice President of Content and Head of Financial Services. It's Dan Van Dyke.
Thanks for having me back, Marcus. It looks like you didn't learn from the first two times, but I'm glad to be here.
I've not yet, maybe sometime. No, it's a pleasure to have you, sir. Thank you so much for hanging out and talking about financial services things with us. But before we get to that, the fact of the day, croissants originated in Austria. We usually think of them as French. These flaky pastries originated as Austrian. According to Smithsonian, it originated in 1683 to celebrate Austria's victory over the Ottomans at the siege of Vienna. The story follows that a baker, up early to make bread, saved the city when he heard the Turks tunneling underneath the city, sounded the alarm. The kipfel, as the pastry is known, the kipfel's curved shape, said to mimic the crescent moon of the Ottoman flag, then would seem to pay poetic tribute to the indomitable spirit of a city that resisted a powerful invading force. So, how did it become associated with France? Marie Antoinette, the last queen of France before the French Revolution, popularized the croissant in France by requesting the royal bakers replicate her favorite treat from her homeland, Austria, from Vienna.
It's ironic that a pastry that's designed around resistance is impossible to resist.
It's a wicked irony. Mm-hmm. Today's real topic, are neobanks going to replace legacy banks? So Dan, today we're talking all about neobanks. What are they? Who some of the leading players are? How they're faring as of late? How many people are using them? And where they're kind of going to go into the future. So we'll start by explaining kind of what they are, I guess. And people might be familiar with the term digital-only bank. Banks like Varo and Ally, or neobanks, which are Chime, Current, Aspiration, ones like that. What is the difference between a digital-only bank like a Ally and a neobank like a Chime?
That's a great term to start out the conversation. So digital-only banks is the umbrella term, and that includes, as you said, incumbent banks operating a digital-only model, so not having branches, as well as neobanks, which are sort of the challengers. And digital-only banks have been around in one way, shape, or form for decades, actually, dating back to before the 2000s with Ally Bank, Discover Bank, USAA. And while they often offer really excellent digital services, their core, which you can sort of think of as the operating system of the bank, is oftentimes a little bit outdated. So it might be flashy features as far as what you're interacting with, but all that is sitting on top of Windows 98. And what that means is it takes a lot longer on the back end to offer all these cool features, and it costs a lot more for providers to do so. And all that tilts the advantage in favor of this next generation called neobanks to roll out services faster, more cheaply, and pass those cost savings on to customers in the form of really flashy, differentiated features.
Okay, so US digital-only bank account holders, about 30 million of those in the country. It's about 11% of the population and growing very strongly. They'll nearly double by 2025. But that's digital-only banks like Ally and Varo, as Dan just explained. Neobanks is what we're going to be focusing on, Chime, Current, folks like that. So we'll give you some of those numbers a bit later on. But let's start by rewinding for a second here, Dan. You mentioned that digital-only banks have been around for decades now. What's the tiny history here of neobanks?
Yeah. So you sort of set the stage. That was version 1.0. And the second generation of neobanks came out around 2010. And the most noteworthy example of the second generation is Simple, which provides really namesake features that you might expect based off its name, a no-nonsense interface. And it grew to about 100,000 customers by 2014. And at that point, it sold to Spanish bank BBVA, which up until very recently has also operated a US arm for $100 million. And at the time, that was a pretty eye-watering figure. And it had just a couple of very big rivals, such as GoBank and Moven. Fast forward to today, and the third generation of neobanks, which has really hit its stride in the past 5 years. The UK is very much leading the way. And some examples of the largest neobanks in this new generation include Monzo and Revolut. And then in the US, we have Chime, and the largest neobank of all is actually based out of Brazil, and that's Nubank. And they're growing thanks to flush venture capital funding and also unique features that have found an audience with strong interest. And an example of some of those features include early paycheck access, the ability to overdraft up to a set amount like $50 or £100 for free, as well as money management features. And they're so much bigger than the last generation that I mentioned. In fact, Chime was most recently valued at $25 billion. You remember I mentioned before, Simple sold for 100 million. So that is 250 times the amount that Simple was sold for over a short period of time.
Yeah, so I mean, you mentioned, I was going to ask you about some of those unique selling points for neobanks, but it does seem to be things like no overdraft, pushing no hidden fees, no minimum balances, no monthly fees, no foreign transaction fees, and positioning themselves as a way to build credit as well. Sometimes it's difficult to kind of get a foothold within banking if you are a lower income household, and so they're trying to appeal to that to a certain degree. It seems as well, Dan, that like they came around kind of the right time. There was a study from Capgemini, and it looked at 11,000 folks worldwide, and was looking at the different banking channels that they used before the coronavirus and currently. And before the coronavirus, you had most people banking online, banking on websites, 49%. Today, that's up 5 points. Mobile banking apps were next, 47%. That is also up 5 points since pre-pandemic. The ATM, 34% of people using those. That's down 8 points. And the branch was at 22%. That's also down 7 points. Some people using chatbots to a certain extent. But it seems like it was the perfect time for neobanks to come around, as people wanted less physical contact with their banks and things to be more digital.
Yeah, and that distinctive feature set in the midst of all the uncertainty that was wrought by the pandemic, as well as riding the wave of digitization that accelerated throughout the pandemic, has allowed neobanks to supercharge their growth rate. You mentioned distinctive features that separate neobanks from legacy banks, and you hit on a few of them in that they offer all these flashy features to entice consumers. There are just two other ones that I want to hit on, one of which you started to touch on, the other which bears some exploration. The first is that we use the term neobanks, but oftentimes these are not even banks. So they're really more like marketing or servicing companies that do not hold a license. In the US, it's incredibly difficult and expensive to get your own bank charter. So rather than doing all that work to gain regulatory approval with no certainty of a payoff at the end, a lot of these neobanks are simply licensing out to third parties that act as the backbone and actually hold those accounts. So what they're doing is they're managing the customer relationship from onboarding to servicing, and leaving the actual banking to real banks, quote unquote. The second thing is that you mentioned the resonance of the value proposition that we've talked about with customers who were hard hit during the pandemic, and generally, just with so much economic stratification at the moment, the fact that a lot of these banks are offering services that help consumers save, spend less, and all that is attractive. You're seeing neobanks that are arranging themselves around the customer segments they want to target. So the underbanked is the low-hanging fruit, or those that are sort of like middle income, young. But we're seeing hyper segmentation catching on among these neobanks too, which is an interesting trend. So for example, you've seen neobanks crop up like Daylight that are targeting the LGBTQ population. You've also seen others that are targeting specific races or ethnicities. The reorientation around customer segments being the organizing principle of what type of bank should exist represents a fundamental difference from in the past, when geographic footprint was the factor that determined who you banked with.
Yep. And we're going to talk about some of the leading neobanks in a second, but let me just explain how many neobank account holders there are in the US. So we've got 20 million of them this year. That's going up to 25 million next year. By 2025, that will get you up to close to 40 million, which is a lot of folks. We had the digital only numbers before, but this is just the neobank account holders in the US, 20 million to date, and that's split across a number of players. We broke out the top 4, and then we've got the others as well. We're going to talk about some of those leading players in a second, but first, a quick word from our sponsor, VTEX. Everyone is talking about digital transformation, but what does it mean in real life? Digital Insider is a new podcast series about the digitalization of retail, where business leaders, academics, and thinkers discuss how businesses are transforming and give their perspectives, practical advice, thought process, and lessons learned. Go to digitalinsider.com to learn more, or listen to it on Spotify, Apple Podcasts, or wherever you get your podcasts. Dan, let's go through the top 4 neobanks for a second. So Chime, you mentioned that neobanks have been around since about, I think you said 2011. Chime itself is 10 years old, and they have the largest neobank that we have. I think about 13 million customers, according to our most recent forecast. You mentioned that they're the highest value-based neobank, $25 billion, I think you said. And Chime, it seems from their marketing, from their site at least, that they're targeting the kind of low to middle income consumers, and they want to build financial health. So that's who Chime is. What do you think is going to help Chime to hold on to that top spot long term?
I think so. Chime's biggest advantage is its biggest potential risk, in that it is the largest of the challengers. So the reason that that's an advantage is it yields things like network effects. It yields word of mouth growth, so they can reduce their cost of serving customers. They can reduce their cost of customer acquisition, and all that's great. But it also puts a target on their back when it comes to the media, when it comes to regulators. We've seen upstarts have sort of a halo that protects them from any criticism. And, in the past, this has played out through big tech, it's played out through Uber. And once you reach a particular scale, all those benefits of protection seem to fade away. And if you are not careful to make sure that you're not making any missteps or acting like a scrappy upstart and cutting corners once you become big, it can be a very big growth risk to you. So I believe that Chime has a lot of legs to continue to grow. Our forecasts call for it to continue to grow, but it'll need to fundamentally reinvent its operating ethos, similarly to how Facebook, at least if you look at how they're positioning themselves internally, at one point went from move fast and break things to move fast with scalable infrastructure. And obviously the message didn't get across the entire company, as proven by some recent New York Times articles. Chime is going to have to navigate that tightrope.
So in terms of Chime's growth, you just put out the US Digital Only Banking Revolution report, how legacy banks can hit back as neobanks take off. You worked on this along with Greg Magana. And in there, you note that Chime's 13 million customers nearly matches the 13.5 million active mobile users Citibank, the 4th largest US bank by assets, reported having in North America in Q2 2021. So a remarkable comparison to Chime's 13 million to Citibank's 13.5 active mobile users. And then also, in terms of their growth, Chime has about 4 to 5% of Americans using it today, which is quite significant, especially for something just 10 years old. By 2025, 8% of Americans will. That will account for about 23 million Americans. Second place, Dan, we've got Current. They have 4 million users today, so they're quite a ways behind, 3 times fewer users than Chime has. They see themselves as a banking for modern life company. What sets Current apart, in your opinion?
Yeah, so number 2 by size, but definitely number 1 when it comes to their growth rate. And I would argue that Current's unique feature is not really its feature set per se, but it's marketing. And marketing, being the competitive advantage that neobanks bring to the table, has been wielded as kind of a a criticism of them. So I remember reading Green Dot's earnings when they were criticizing neobanks for just that reason. But I believe that that's a powerful advantage to have. And what Current does differently is they are meeting young customers on the channels and through the preferred mouthpieces that really drive them to make decisions about products. So they've mastered influencer marketing, they've mastered Instagram, and all of this means that they are going to, according to our forecasts, yes, have their growth rate come back to earth, but nonetheless will continue to do very well into the future. So Current's quite an interesting provider for that reason.
Yeah, so Current, we've got them with 4 million users this year, 5.2 next year. They'll get up to about 8 million, over 8 million by 2025. Good enough to hold on to that second place position. Aspiration, they position themselves as a green financial services company. Their website, Dan, feels more like you've landed on the Redwood National Park site. There are trees everywhere. The most prominent words on the homepage are, "You can change climate change." When you use your Aspiration debit and credit cards, you can plant a tree by rounding up to the nearest dollar. And we have it as the third largest neobank and has 3 million customers. In your opinion, what do you make of Aspiration's positioning in this space?
Well, they're an interesting provider, and they've definitely attracted attention not just from customers, but also from celebrities as well, such as Leonardo DiCaprio. And looking ahead, they're really targeting an addressable market at the center of a Venn diagram between people who really hate banks and really love the environment. And the center of that Venn diagram might be bigger than a lot of folks think, because Aspiration has grown very quickly. It currently has about 3 million account holders, about 1% of the US population with an Aspiration account. And that's projected to grow to 6.4 million by 2025. So about 2.5% of US consumers. And it's an interesting provider in that it's really taking the ESG ethos and applying it to the banking sphere. And I think the growth rate speaks for itself.
Yeah, their marketing I found interesting. There's a campaign, Clean Rich is the new Filthy Rich. That's one of their campaigns. They've got QR codes dotted around that you can interact with, and hand sanitizer stations as well. The final player we've got here is Varo. So Varo, they say they're a bank for all of us. 2.7 million customers, making them the fourth largest neobank. Dan, how can Varo move themselves through the pack and fight for a medal position?
Well, I think what's unique about them, you really hit on when you said that they're the bank for all of us. No other neobank that I mentioned can make that claim because everybody else is forbidden from calling themselves a bank. Varo is the only one who has gone through the hard work of achieving a bank charter. And that reportedly cost more than $100 million in multiple years. And the benefit of having done so is that they can, one, call themselves a bank. And it's interesting because if you look at what some of its competitors are doing, they are intentionally positioning themselves as not a bank. So Current, for instance, says, "What do you think we are, a bank?" In a lot of their product messaging. Varo will need to prove the appeal of this term as it continues to grow. But our growth rates that we're projecting out assume that it will do a pretty good job. So by 2025, we project that it will rise from about 1% adoption to about 2.4, putting itself very close to Aspiration when it comes to total account holders.
So that's 20 million total US neobank account holders. Dan, we've gone through all the kind of major neobanks there. Just to recap, we've got Chime, Current, Aspiration, and Varo as well. What's next for neobanks?
A few things. So for neobanks, we've talked a lot about how they're doing in terms of user growth, which is excellent. But for investors, it looks like black is the new red, in that investors are beginning to lose patience with neobanks that don't have a path to profitability. So interchange is a rich revenue pool to pull from, but neobanks are going to broaden their horizons to new ways to capture dollars and cents. The first one of those that comes to mind is paid subscription tiers. Neobanks are launching premium accounts alongside the free ones to supplement that interchange revenue and packing in flashier perks to incentivize consumers to make the plunge. The second one is they're broadening their feature set. So beyond holding money to lending, to wealth, to other profit driving products, the lure of all these new streams is just so tantalizing that neobanks surely won't be able to avoid it for long. And we've already seen glimmers of this playing out. So we have Chime, Varo, Aspiration, all currently or planning to offer a credit card, and Varo also offering small dollar loans up to $100 with nominal fees depending on the amount. The final trend that I would point to is one that you hit on with regards to aspiration, which is just moving up the ladder of income segments with regards to customer lifetime value. So moving to affluent customer segments, aspiration targeting folks that want to be the clean rich, plastering billboards all over New York, Los Angeles. I'm based in Brooklyn. If I walk down to the water, I see a beautiful billboard overlooking a waterfront hotel, and everybody from their rooftop bars can look down on it and pick up a brand new card. So that's sort of the future for some of these providers.
So JP Morgan Chase, they say they serve nearly half of the US households with a broad range of products, and they boast 51 million active digital customers, at least as of 2019. Chase has the same number of mobile banking users today, 35 million, as all the neobanks will have by 2024. So Chase has the same number of mobile banking users today as neobanks will have total in 3 years' time. How much are neobanks really going to disrupt the incumbents?
Well, this is just the early innings. By 2025, 15% will have a neobank account. But the important thing to look at is the growth rate. And the growth rate is, yes, slowing down a little bit, but nonetheless puts these providers on a trajectory to become mainstream over the next decade. And this will have profound effects over the legacy bank advantages that the big four down to regional banks, down to community banks continue to enjoy. So they're already seeing a hit when it comes to new accounts opened via their digital channels, for instance. We're seeing neobanks grab the majority. We'll also see a downstream dampening effect when it comes to fee revenues. So neobanks are using low or no fee models, which they can afford to do because their cost of serving customers is so much lower thanks to their agile cores. And all of this will put increasing pressure on incumbents to match their feature sets so that they can stack up and grab new customers. And that means that all fees are on the table. Account fees, maintenance fees, overdraft fees, which, as you may know, Marcus, overdraft fees alone were a $12.4 billion revenue stream in 2020. And we're already seeing big banks start to pull back from that, with Bank of America being a recent example and PNC making moves in that direction. The final and perhaps most profound result of these neobanks targeting customer segments from the large underserved group to more niche customer segments like we talked about with Daylight is the risk of a death by 1,000 cuts. So each one of these customer segments on their own might not be a crippling blow, but added up, the fundamental impact of all these customer segments one by one being shaven away might be really profound in time. And that's what's powering our big number in terms of overall growth for neobanks. It's really a loss segment by segment that these incumbent banks are suffering.
All right, Dan, time now for the post-game report. This is where we give you the main takeaways from the episode. Dan, what are your takeaways for today?
So I would say that the big takeaway from this segment is that the neobank threat is real and it's growing. But with all that said and all the fire and brimstone, the question remains, can mainstream banks go digital first faster than digital first banks can go mainstream? And that question has not been answered yet. The reality is the future is not set in stone. And it'll be interesting to see how incumbent banks hit back, which is a theme we explore in our recent report.
Recent report indeed, yeah, that we base a lot of this conversation off of is called the US Digital-Only Banking Revolution, how legacy banks can hit back as neobanks take off, and it's hot off the press. Literally just dropped 15th of September. So go check that out if you're a pro subscriber, eMarketer.com. That's all we've got time for today's episode. Dan, thank you so much for hanging out with us.
Thank you, Marcus. Have a good one.
Of course. You too, sir. Thank you to Victoria. She edits the show. And thanks to everyone listening. We'll see you guys tomorrow, hopefully, for the Behind the Numbers Daily, an eMarketer podcast made possible by VTEX.